Is the worst over for this cryptocurrency sell-off? What are the risks that still remain to the markets, and what can we expect moving forward? Well, I'm going to be investigating all of that in today's video. My name is Lark. Every day I make videos talking about cryptocurrency investing. So if you do like that topic, you like staying up to date with what's happening in the cryptocurrency market, then you should maybe just consider a quick little tappity tap on the oldie thumbs up button. Thank you in advance for taking a quick second to do that. By the way, every single week my team and I make Wealth Mastery. It's a cryptocurrency investor report, helps you keep ahead of the curve in this fast moving market. We do step-by-step DeFi tutorials, altcoin reviews, NFTs, portfolio updates, token sales, airdrops, and much, much more. You can sign up for free using the link down below. Go premium for less than $10 a week. Now let's get into the big news of the day. Obviously, the conflict has kicked off between Ukraine and Russia in a very massive escalation, with Russia sending its military forces in to Ukraine, attacking military installations around the country, which crazy stuff without a doubt. And look, it's just nuts. It's just nuts. We're going to talk about this here. So as investors, and we're going to get beyond the investor point in a second, but just we talk about investing on this channel, so that's how we're going to focus primarily on this event happening in the world. So as investors, we need to realize that Russians own around 12% of all cryptocurrency globally. Russia is also the 11th biggest economy, so pretty big deal to see, Russia, because of the economic backlash that it's going to face because of this, getting involved here. So we do have this wild card of what's going to happen with all the Russian crypto. I imagine most Russian crypto holders will be holding on to their crypto, especially in the face of a falling ruble. You think Bitcoin's getting hit rough? Man, the ruble's going to get crushed. Ukraine also, the vacuum cleaner's back. The vacuum cleaner's back, man. Let's leave these guys in the vacuum cleaner. Anyway, Ukraine, also a massive adopter of cryptocurrency technology. So here's an article from the other day. Ukraine already trades more crypto than fiat currency. They also passed a bill recently in Ukraine allowing a legal status for cryptocurrencies within the country. So we have two countries that are basically both massively into crypto going at it with each other. So obviously the potential effects on the cryptocurrency markets are there specifically because of this event. Not even talking about what the equity market's going to do, which we're going to mention here in a moment, but just because these countries are already so into crypto, we're probably going to see potentially fiat exiting both Russia and Ukraine via cryptocurrencies. I wouldn't necessarily imagine that a lot of people are going to be panic selling their crypto because of capital controls and stuff like this. People are going to want a way to move money in and out of the country and are not necessarily going to hold on to the hryvnia or the ruble, which can get hit pretty hard in this situation. Russia, also a major exporter of oil, gas, metals, wood, wheat, other commodities, industrial products. So when we consider the economic sanctions that are going to start coming towards Russia, we have to then consider the knock-on effects to the global supply chain, the price that regular people pay for goods all around the world, and of course, the impact that could have on economic growth globally. So the knock-on effects from this can be very, very serious. We've also, of course, seen, the U.S. responding today, announcing a sweeping raft of different sanctions to be leveled against the Russian Federation. Other countries, of course, also hopping on board that train. So some of the things that we've seen coming out of the new sanctions package include technology export controls to Russia, limiting their ability to work on its aerospace, shipbuilding, and other industries. Also freezing assets belonging to Russia's largest banks and freezing assets belonging to the Russian elites and their family members. So in particular, the U.S. will be freezing assets at Russia's largest banks kept in the U.S., including VTB Bank, a state-owned Russian entity, and Russia's second largest bank, as well as Sberbank, which is the biggest bank in Russia. The UK also announcing that it would freeze any British-based assets belonging to VTB. So that's a pretty big move that Both the US and the UK. We'll probably see some other European nations hopping on board with this as well, would be my guess. Freezing assets of Russian banks abroad. Now, on a daily basis, Russian financial institutions conduct about $46 billion worth of foreign exchange transactions globally, 80% of those in US dollars. So most of these transactions are now going to be disrupted because two of Russia's biggest banks now finding themselves out of international markets, essentially. State-owned entities will also be blocked from debt markets in the USA. We also have... this is an important part of the equation here. Two things. One is that energy transactions are still going to be going on, so they've exempted energy from all of this stuff because obviously Europe still relies very heavily on Russian gas, Russian oil. And they've also said that at this time, they will not be expelling Russia from the SWIFT network. Now, the SWIFT network, in case you are not familiar, that is basically how banks send money back and forth to each other internationally. They did $77 trillion in payments in 2019, probably relatively similar levels in 2020, 2021. It's a big damn deal. This is how money moves around the world. If you cut Russia out from this, you would cut them off from the entire international financial system, which would be, of course, a massive move, but it would also have massive, again, knock-on effects for energy markets and all of this stuff. So that has not yet been done. Could, still be on the table in the future. Who knows? But right now they're saying they're not going to be kicking Russia out of the SWIFT network. So, big economic repercussions here for what is happening. And of course, that all spills over into crypto because it spills into the stock world. We saw the Russian ruble getting smashed yesterday, Russian stock markets getting hit yesterday. Although, interestingly, U.S. equities doing well. We're going to talk more about that in a minute. I just want to mention real quick, I have friends and family on both sides of this conflict in Ukraine. It's a very complicated situation, and we're scared for family members in Ukraine. Family members in Ukraine, obviously, also very scared about what's going on. We have Russian friends and family, in disbelief, essentially, at what the Russian government is doing. So obviously we're praying for this all to be over soon, for this to come to an end. It's a terrible situation. We just want to see it be finished as soon as possible so that everybody can be safe again. But it is ongoing at the moment. And obviously, because talking about markets is what we do on this channel, we're going to continue talking about that exact topic. So look, interestingly to see in the markets, we had a sell the fear of the invasion, but actually buy the invasion seemed to happen in the markets. Because markets are totally freaking whacked, man. Come on, guys. Come on, markets. What's going on? We see Bitcoin pumping today. Meanwhile, gold was dumping. So as the invasion was kicking off, we saw gold pushing up as things kind of chilled out a bit. Media hype-wise, we saw, the U.S. make its stance known and all this stuff. Gold came down, Bitcoin pumped. We also saw a pretty crazy daily candle here for Bitcoin. So that, again, it represents the massive dump that we had. A big pump back up, actually, to a little over $39,000. Pretty impressive pump here for Bitcoin with the current price at the time of recording this video, basically at the same price that Bitcoin's been at for the last 4 or 5 days. So no massive change there. Interestingly, the S&P 500 also pumping. So although it did fall below the previous yearly low yesterday, equity markets have indeed roared back. So that's pretty interesting. And of course, when the equity markets are doing well, this is the S&P 500. When the equity markets are doing well, crypto's doing well. So although Russian markets have been devastated, we see U.S. markets actually bouncing on the invasion, which is crazy stuff. And of course, Bitcoin bouncing right along with that because our correlation to the stock markets is heavy at this point. Interesting, too, that while we have this cute little rally going on here for Bitcoin, we are still trading under the 50-day moving average. We're still trading under the 21-day exponential moving average. Still showing that we are, in spite of a little bit of green in the market today, very much in a bearish trend still for the cryptocurrency markets, trading below the most relevant short-term trading averages here. We did, however, get a higher low, so even at the bottom of that sell-off, it still technically counts as a higher low from the low back here around $32,500 back in January. So that's technically a good thing. Technically, we'll see, of course, what continues to happen. A little bit of hopium here for you, too, from Jeff Dorman, the CIO over at Arca. He said, remember January 20th, the NASDAQ was plus 2% midday, ended the day minus 2%. Digital assets fell 30 to 50% over the next 4 days. Then he says that today the NASDAQ started minus 3.5% from overnight futures. Now it's plus 2% an hour from the close. It's 5.5% swing in the positive direction. I wonder what the next 4 days will bring. Maybe we see, of course, a positive rally coming in for U.S. equities. And of course, if U.S. equities are rallying, the crypto markets are going to go right along with that. Just an interesting observation, as he said. Don't bet the farm on it, but interesting observation. Your hopium for the day, if you will. Final thought for today's video. While this crypto bounce is sweet, we do like seeing green in the market. Just keep in mind that we are not out of the woods yet. We're still very early in a conflict which has some very big potential knock-on effects. Lots of variables remain. There's no need to go FOMOing into positions right now. Stick to your plan. Keep accumulating for the long term. I mean, that's what I'm doing. You guys, obviously not financial advice, so do whatever you're doing personally, but that's what I continue to do. Just continuing to accumulate positions, buying more Bitcoin, buying more Ethereum, thinking long-term, thinking beyond all the craziness going on in the world and where we're going to be with the markets in 5 years or 10 years, not tomorrow necessarily. Anyway, just my 2 Satoshis for the day. Let me know what you think about all of this craziness down below in the comment section. Thank you so much for watching today's video, and peace out till next time.